going to do a quick review for a YM long and also a NASDAQ long on today, Wednesday the 8th of October. So I just made a video for gold earlier and jumped on for the New York session. I only got to the charts like just after 9:30 actually, but I still did my game plan, which I record on voice. So record basically what I'm looking at on voice, and then jumped on and found a few nice trades. This is that YM trade, which is up really nicely. After I was initially up 200 on NASDAQ, on MNQ, and then I flipped over to MYM. However, in this selection up here, it had NASDAQ selected, and so I bought 5 NASDAQ contracts and quickly closed it, but lost the majority of that $200. So if you add 150 to whatever the PNL is here, which is 545, that's what I've got out of this trade so far. And yeah, I'll walk over this trade first and what I was seeing in it, and then I'll go over from there. I might take another partial, however, because RTY has just taken this high and YM has not. So I do want to hold something because I think this could really run, but I think it makes sense to take one off right here. Yeah, still one more. And these two, I'm very happy if it comes down and takes me out for $33. And what my ultimate target is, if we look at the, let's see, 1 hour time frame, if we zoom all the way out, really nice perfect equal highs up here. We have a sharp sell-off, leaving a really obvious impulse high. We came all the way up to it, however, failed to take it out, meaning that we just balanced this entire range. When we balance a range like that, perfectly filling in the entire imbalance, that's to prepare the range for a future low resistance liquidity run. So now that we've already balanced this range, it means that when we come back up, I'd expect us to do it in a very fast manner, something like that. If we did not have this here and we still had this unfilled imbalance, which is in this area, then it would be more choppy price action on the way up. So the fact that we've already done that makes it very high probability for me that we're going to have a very fast run up. So I do want to hold on to something for that. Jump over to the quad. The only thing that was wrong with YM today is that, as you can see, we're still within Monday's range. We made perfect equal lows with Monday and Tuesday. And on the daily chart, it really doesn't show me much of what's happening. It could come down and take these lows out. That would have been preferable. But on the lower time frame, it actually showed some nice price action. The other trade I'll go over is on NASDAQ. So I'll do the YM trade first and then NASDAQ after. But as you drop into the lower time frames, sure, we left equal lows, but you can see that both sides of the range have liquidity on them. And if you look at the lower time frame, you can see that we've actually been accumulating all these lows. So a lot of sell side down here that we've dropped below, then engineered all of this internal range overnight. And at 9:30, we sold off, accumulating all of that. I always use RTY for SMT with YM. They are very nicely correlated, and then NASDAQ and ES I use together as well. But you can see that with the Asia low, YM took that out, whereas RTY failed to take it out. So that's our SMT. So I noticed that on the 15 minutes, obviously below the midnight price, took out all the sell side, a very sharp sell-off into the range. 5 minutes. This is where it starts getting interesting. Because we had such an aggressive sell-off, you have to imagine anyone who's chasing price at 9:30, they need somewhere to trail their stops. We conveniently run up, engineer this really obvious buy side pull at the 9:45 high, and then sell off back lower. So now there's a very obvious buy side pull where trailed stops would reside. RTY on the other hand ran up, made that same high, but instead of selling off, it continued pushing high and continued pushing high quite aggressively, or with this candle at least, straight back up. So on the 1 minute chart, go over here now. On the 1 minute chart, that's what this looks like. Engineered a really obvious high for trailed stops, sell off, and then I'm looking on the lows. I want to see, are we rejecting from an impulse low? Do we want to take this low out, or is this impulse low good enough? I've mentioned before that impulsive lows and impulse highs make incredibly good places to raise liquidity for like a super reversal. And while RTY was making higher low and failing to get lower and pushing higher, YM had taken out this impulse low with a nice long wick, immediately comes straight back down, taking it out once more, and then just sat down here at the lows, spending time, a lot of time, at the lows ahead of the 10 a.m. candle. As we're consolidating down here, I recognized the SMT, that we were rejecting this low, and I wanted to see some displacement back up to confirm that we had just trapped everyone short at these lows. Because we had this long wick on the 1 minute chart that had initially taken the low and then we'd taken out once more and rejected straight back up, I was confident putting on a small position initially there, and then as soon as 10 a.m. started ripping high, I added in quite heavily, trusting that it should keep on pushing up towards this high. And you can see that over here with my executions. So buying initially after we'd had this second raid on that long wick low, with a stop loss below that low, adding at 8.14 and 8.11, so quite high up really. I added there and I added there, but at that point I was able to move my stop up to around this area here, and was a lot more confident in the trade, taking partials as it hits the 50s, just a small partial to cover the loss that I took with that mistake, and then slowly peeled them off as we came into the highs. Because we had this inefficiency up here, I was considering that it might want to hit this area, reject lower before coming back up, so I took some more off there, and then you saw me take this one up here as RTY had just hit that impulse high. I also added a few back on down here after I'd taken some off with a pretty good fill up here, and we dropped back down into the range below the 50s. I added on another 3, so that's why my average is all the way up here right now, but initially the average would have been around here. So at this point, because RTY did hit that impulse high, once again, an impulse high tends to make a very good place for a turtle soup, and it's rejecting lower a bit, so that's why I took that partial up here. However, I like how YM is leaving these smooth highs, and you can also see how this was the only imbalance within this range other than the one right at the premium, and we've just filled all of that imbalance, easily getting above it. So if we were to get below and then close back above this imbalance, I'd look to see this used as support and send us into the highs. And if I haven't been stopped out before then and it does want to continue high, I might add back into the position with a few of the contracts I sold up here. That is essentially this trade, however. The main points being that, if I bring it back up, so the main points is that we have a very obvious draw on liquidity, which makes a lot of sense. These smooth highs with an impulse high above it, that's a delirium framework. Clearly we've balanced this range, so it's building up the narrative that we're about to have a low resistance liquidity run. We've taken a deep discount internal range down here, engineered a whole bunch more internal range, taking that out with a singular move lower right at 930, putting an SMT on the lows. All that together shows that we've taken a huge amount of sell side and we have reason to go high. And then on the low time frame, the narrative that we had this sharp sell-off, we trapped everyone short at the lows. We engineered a convenient high for everyone who was short in this range to trail their stops. And now there's a huge amount of buy side that's just accumulated up here. We then entice people lower, take out this impulse low with SMT, meaning that we do no longer have to take that out. We spent time down there allowing yet more people to trail their stops to this high, and now we've got a lot of trapped shorts down here. Everyone sold down in this area, and if they didn't have their stop there, they've got their stop here, and so price is likely to rip straight back up to that level, which we might be getting right now. So that is the general idea of the trade. Where I'll take the next partial is going to be at this 930 open, because that is a bearish order block. It's also just above 47k, so we sold off from 47k, so that would make a lot of sense for the next partial up at around 47,020. Now on to the Nasdaq trade. I can show my executions. Micro Nasdaq. With the Nasdaq, the NQ contracts, the 5 that I bought, that was up here somewhere, just bought 5, and it had a small movement against me, but obviously 5 contracts, 5 full Nasdaq contracts is going to do a lot of damage. So I'm lucky I got out with just like a $150 loss. This is the Nasdaq trade. This is the 15-second chart. Initially, I was looking for us to find resistance at 153 potentially, and we did exactly at 153, sold off. That was the midpoint of a SIBI. So if we were bearish, this is where I expect us to sell off from. We did start selling off. We hit this low. I was looking for us to have a impulse rejection failure and close back below it. We didn't. We actually rejected that low. Then I figured, well, maybe it's going to, because I'm anticipating a impulse rejection failure down here, which is where we get below, retrace, close back below. Because I'm anticipating that, I want to see us have a impulse rejection at this impulse high. We hit the impulse high. I'm like, cool, that's all good. We begin dropping a little bit lower, trade above it, and then close back below. As soon as we close back below, I figured, actually no, I just got short right there. That's right, I got short here and just put my stop at this high. So that maybe wasn't the best move. My thinking was we have a clear inversion fair value gap, and if price is indeed bearish, it should not get above this kind of area. And so you can see I actually mitigated before it hit my stop at 138. As soon as we got this closure back above this high, or about to, I closed out the trade, even though my stop loss was up here. And I was super flexible and able to flip back to the long side. And the reason for that is because I recognized that all the other indices were looking really strong. ES was looking like it wanted to catch up with Nasdaq. It had equal highs. And YM obviously was looking very strong as well. And it was just so much time we spent down here that this was a very obvious high. Anyone looking to short definitely had their stops up there. So how I got in was using the impulse rejection failure model. That was paired with this impulse rejection. So impulse rejection, you then look for the opposite of that, which is the impulse rejection failure, which is where we trade above, we take an impulse high, we begin rejecting, and you'd expect us to continue pushing lower from here. However, it fails to do so and then closes back above. Once that happens, I waited for it to drop down to a reasonable price, which is 134.25, which is right there. I got long, and the stop loss goes below the sell side delivery range. That just went back over that impulse high. So the stop loss down there came relatively close, but I held on to it and was confident. Ran it up, took a partial at this deep premium internal range high, which is a logical place to take partial, so did really nicely there. And then it continued pushing up, and as it pushed into the highs, as you can see, it's peeling off 1, 2, 3, 4, 5, 6. 6 of them here, 2 here, and then 2 up in this area as we hit a key point of interest. So that was a really nice trade, and I'll walk through on these charts just to show a bit more detail what it actually looks like. So RTY looking nice and strong now, it's looking good. Nasdaq, that's right. There's also one other thing I want to mention. So if you watched my video from earlier today, you'll remember I talked about this situation over here where we have a apparent wick rejection failure that fails. So it's like a wick rejection failure, and then it rips to the upside. And the ways to identify that is that this was at a discount of the Sterling range, and it was doing 3 drives into the low to accumulate. That's I've called the triple wick something. I keep on forgetting its name, but yeah, triple wick flip. That's right, triple wick flip. Bit of a mouthful. And the idea is as soon as we close back above the midpoint of that wick, that confirms that that's long, and you can get long there. And you can see the exact same thing happening down here, where we are clearly at a discount of the range from that high to that low. We are not at a premium. And then when we look at this area, we have a long wick at 6 a.m. 7 a.m. runs it out just by a few points, but it does, and rejects straight back up. That should be a very bullish signature. So the fact that it fails to happen and drops back below should be a bearish signature. However, it's only a bearish signature if we're in a premium. We're in a discount, and so I was looking to see, do we get a closure back above this? I didn't actually see this live. I saw it as I was doing my game plan at 9:32 a.m. But if we drop down to a 15-minute chart over here, you start seeing that played out beautifully, where we have that closure, and then we get a closure back above that 1 hour wick midpoint at 9:14 a.m. or 9:15, and then 9:30 comes down once again and retests that level. So as soon as we got that closure above, that would constitute a long entry, and you can see that played out really nicely today, and that's played out on gold earlier as well, which I did trade, but I kind of bitched out of. But it did actually work out really nicely on the 15-minute chart, I believe. So we'll look at the 15. So here, you'll just get rid of everything. So a long wick, a second long wick, and then a third long wick takes that out. But we're at a deep discount of the range. And so when we got a closure back above on the 5-minute chart, so as soon as we got a closure back above that green midpoint on the 5-minute chart on this candle, it then drops down and you can get long and catch this run up. What I didn't like is, so I did buy in here, but then when we had this drop down of this long wick, I really didn't like that. I was expecting this area to stay unfilled, but it just missed my stop. And then when it just consolidated around here, didn't really get away from this wick very fast. I didn't like that either, and so I actually closed out majority of the position before it ran for me. So I need to really, the more I see these patterns play out, I need to actually make a resolution in my mind to actually just follow the pattern and follow the plan, because I did have a lot of confidences here and could have really capitalized on that really nicely with this run up. But yeah, that was that model. Then NASDAQ, you can see this is the 1-minute chart for that long that I took. And if we look at the 15 seconds as well, it's 9:30 ripping straight out the gate. If this was bearish, you'd want to see us hit that low, reject high, and then get back below it, and that'd be a nice short. But we actually rejected from there. We got back above this high. We then delivered sell side delivery over it, and then closed back above. You can see that sell side delivery by the fact that we took out a swing low. So any kind of a swing low below this line counts as sell side delivery, and then we get a closure back above, showing that we've flipped back to buy side delivery, meaning that this low should now remain intact. It becomes a nice entry for a long, and that played out really nicely. This line up here is one that I found quite interesting as well, and that is because if we go on the RTH chart, it is some retail classic support and resistance that was engineered. So perfect equal highs on the RTH chart. We then sell off below it, so it looks like resistance. Then we break above, break below, so gyrating around that level. But I figures that if we are going to open 9:30, and if we are going to get above the midpoint of this gap, so that's where I got 153 from, was just about the midpoint of that gap. If we are going to get up there, then I'd expect us to hit this high simply because it's a key area of liquidity. Anyone who's short Well, some people who are short might see this as a resistance level and have buy stops above there. There'll be people wanting to buy on a breakout long as well above that level. So the market, when it's near these obvious support and resistance levels, it's likely to draw towards them. Even if it does still use them as support and resistance, it's still likely to get to them. And you can see that a lot of the time, like if you look back on the chart and find any previous level where there are equal highs or equal lows, the market tends to draw towards those levels. So that will do for this brief review. See where YM is at. So YM's had a really nice run up at this point. It's currently 10.35, so, and we're at a very deep premium. So I'd really want to see it continue pushing and accelerating here, especially after hitting this premium SIBI. But the fact that, yeah, might be an idea to take another partial up here, let's say, or just trail my stop. I mean, it's still got a while to go, to be fair. Like if I bought down here, ultimate target is up here, but we do have FOMC minutes later today as well. It is 10.35, so it is a fairly logical thing to do to take another partial, but I might just aggressively trail a partial. That's what I'll do. So stop sell 1. And yeah, I'll be happy with that. Now let's have a look at that NASDAQ trade. So very, very small trade. It was even on a green candle, and I lost 1.25 points. But on 5 contracts, that took the majority of my profits out. If we have a look, this is a fresh combine, by the way, but there's that dip. So from 200 down to 61, just from 1.25 points loss, which is pretty crazy, but it's all good. Cool, that'll do for this quick review.